If you're sitting there worrying about money, thinking you're behind, or that it's too late for you to ever catch up, let me be blunt, you're probably right. Not because there's anything inherently wrong with you, but because the system habits and mindsets most people follow are almost guaranteed to leave them struggling financially. Most people spend decades working hard, saving a little here and there, maybe hoping for a raise or a bonus, and somehow still end up broke, or at least terrified of ever being broke. They think wealth is about luck, inheritance, or hitting the lottery. They think that unless they stumble upon some miracle opportunity, they're doomed. But here's the hard truth: wealth is not about luck. It's not about being in the right place at the right time. It's about making consistent, intelligent decisions over time, and unfortunately, that's what most people fail to do. I've watched brilliant, hardworking people ruin themselves financially because they misunderstood the basics. Some were doctors, some were engineers, some were business owners, but they all made the same mistakes. They spent carelessly, invested blindly, and let emotions dictate their financial decisions. And the worst part, every single one of those mistakes could have been avoided if they had followed a few simple, disciplined habits. Today, I'm going to tell you what I've learned in over 80 years of observing money, investing, and human behavior. These are lessons so simple, so straightforward that anyone could follow them, but most people refuse to, either out of fear, laziness, or overconfidence. If you pay attention today and apply even a few of these principles, you can change the trajectory of your financial life. You can stop feeling anxious about money and start building real security. Here's the uncomfortable truth: most people make the same financial mistakes over and over again, and the consequences are brutal. They spend money they don't have on things they don't need, upgrading to the latest phone, leasing a luxury car, or taking expensive vacations because everyone else is doing it. They chase tips instead of understanding the companies, industries, or investments they're putting their money into. They buy into hype, hoping for a quick win, and lose their hard-earned money almost instantly. They ignore inflation, taxes, and the slow creep of debt, the invisible forces that quietly erode wealth. Many people think that saving a little is enough, but if you don't account for these realities, that nest egg won't go nearly as far as you imagine, and most tragically, they wait for permission to start managing money wisely. They wait for a financial advisor, a mentor, or some magical course to tell them what to do. They fail to realize that you don't need permission to take control of your financial future. You just need the right mindset and habits. Sound familiar? If you've ever worried that your savings won't be enough, that retirement seems impossibly far away, or that a sudden emergency could destroy your life financially, I'm talking to you. If you continue doing what most people do, spending blindly, following the crowd, ignoring compounding, and putting off financial planning, you'll probably end up stressed, broke, or worse, realizing it too late to fix. But here's the good news: it doesn't have to be that way. It's not about being lucky, rich, or exceptionally talented. It's about understanding a few simple truths and sticking to them consistently over time. That's all. I've spent my life studying money, not just the fancy numbers, spreadsheets, and stock charts, but the human behavior behind it, how fear, greed, and impatience cause smart people to make stupid decisions. How simple habits can create extraordinary results if applied consistently. I've seen what works and what fails spectacularly, and I can tell you the same principles have worked for decades, and they will continue to work. By the end of this video, you will understand the simple, non-negotiable principles that create financial security. You'll learn how to stop wasting money on things that don't matter. Make your money work for you instead of you working for money. Build a system of habits that compounds over time into lasting wealth. Let me be clear, none of this is complicated. You don't need insider tips, a high-paying job, or a perfect market. You need discipline, patience, and clarity. If you're willing to apply those consistently, time will reward you in ways that most people only dream about. Lesson 1: I stopped doing stupid things. Let's start with something basic but incredibly powerful. Stop doing stupid things with your money. I once bought a stock just because everyone around me was talking about it. Friends, colleagues, and even media outlets said it was the next big thing. I didn't understand the business. I didn't know the risks. I didn't know why it was being hyped, but I bought it anyway, and unsurprisingly, I lost money. This happens all the time. People jump on trends, gamble with speculative stocks, or follow the crowd without understanding the fundamentals. And it's not limited to investing. It's in everyday spending too. People buy things to impress others, to feel good in the moment, or just because it seems like a good idea. Here's the truth. Most financial trouble comes from stupid behavior. It's the emotional, impulsive, or uninformed decisions that destroy wealth faster than any market crash ever could. Only invest in what you understand. Track your spending. Don't let emotion dictate your financial moves. Discipline beats excitement every time. Lesson 2. I treat money like a tool, not a trophy. Another lesson that transformed my life is this: money is a tool, not a trophy. Too many people equate wealth with status. They think that a bigger house, fancier car, or designer clothes are signs of success. I've never thought that way. My life hasn't been about flaunting wealth. It's been about making smart, rational choices that compound over time. I remember driving an old car well into my 50s, not because I was frugal for the sake of being frugal, but because that decision allowed me to invest more, save more, and create more opportunities for the future. Every dollar saved became a worker for me, a soldier I could deploy to build wealth. This mindset changes everything. When you stop chasing status, you start focusing on results instead of appearances. You start measuring success by freedom, security, and growth, not by what others think of you. Use money to build security and freedom. Don't let it define you. Avoid lifestyle inflation. Spend wisely, invest consistently, and measure progress by results, not appearances. Lesson 3. I learned the power of compounding. One of the most important lessons I ever learned about money came very early in life, and it had nothing to do with complexity or intelligence. It had everything to do with patience. I made my first investment when I was still a kid. It wasn't impressive. It wasn't large. It certainly didn't make headlines. It was just a few $100s, money I could have easily spent on something fun or unnecessary. Instead, I invested it and let it sit. Then I reinvested the returns, and I repeated that process year after year, decade after decade. At first, nothing exciting happened. That's the part most people don't understand. In the early years, compounding looks boring. The numbers barely move. The growth feels insignificant. Many people give up at this stage because they expect fast results. They don't realize that compounding works slowly at first, and then suddenly, by the time I reached my 40s and 50s, something incredible happened. The money I had invested decades earlier began to grow faster than anything I could earn through labor alone. At that point, my money was working harder than I ever could. Compound interest has often been called the eighth wonder of the world, and that description isn't an exaggeration. When you reinvest earnings, those earnings begin generating their own earnings. Over time, growth accelerates. Not because you're doing more work, but because time is doing the work for you. This is why starting early matters so much. Someone who invests small amounts consistently for 30 or 40 years will almost always outperform someone who invests larger amounts inconsistently or too late. Time, not timing, is the real advantage. Start now. Even small amounts invested consistently will outperform sporadic big wins. Delay gratification. Let time do the heavy lifting. Because once compounding takes hold, it becomes almost unstoppable. Lesson 4. I avoid debt like the plague. If compounding is one of the greatest forces for building wealth, then debt, especially high-interest debt, is one of the most destructive forces against it. I've watched countless people earn excellent incomes and still struggle financially because debt quietly consumed everything they made. Credit cards, payday loans, personal loans, and unnecessary financing arrangements slowly drain their future, and what makes debt so dangerous is how normal it feels. Debt is marketed as convenience, as freedom, as a tool for living a better life now, but in reality, most debt does the opposite. It creates stress, it limits options, it turns small mistakes into long-term problems. Interest works against you when you borrow. Every month, a portion of your income goes to the past instead of the future. And once debt piles up, it becomes harder to save, harder to invest, and harder to think clearly about money. That's why I've always avoided debt whenever possible, not because I fear it, but because I understand its cost. Borrowing for things that don't produce value, like depreciating assets or lifestyle upgrades, is one of the fastest ways to sabotage financial progress. This doesn't mean never borrowing under any circumstances, but it does mean being extremely cautious and intentional. Most people treat debt casually. That's the mistake. Live below your means. Pay off high-interest debt as aggressively as possible. Avoid borrowing for things that don't generate value or long-term benefit. Freedom comes from low obligations, not high consumption. Lesson 5, I focus on what I can control. One of the most peaceful financial lessons I ever learned was this: you cannot control the market, but you can control yourself. Markets rise and fall, economies expand and contract, political events, global crises, and unexpected shocks will always exist. Early in my career, I spent too much time worrying about these things. I watched the news. I reacted emotionally. I lost sleep over events completely outside my control. Eventually, I realized how pointless that was. The market doesn't care about your fear or optimism. It will do what it does. What actually determines long-term success is behavior: how consistently you save, how patiently you invest, and how calmly you respond to volatility. Once I shifted my focus to what I could control, everything changed. I stopped reacting to headlines. I stopped chasing trends. I narrowed my attention to my circle of competence, the businesses I understood, the habits I could maintain, and the discipline I could enforce. This approach not only improved results, it reduced stress. Financial success doesn't require constant action. It requires consistent behavior over long periods of time. Don't panic during downturns. Don't chase trends during booms. Stick to your plan. Control your savings rate, your spending, and your mindset. Let the market do what it does. There are several myths about money that keep people stuck. Let's clear them up once and for all. This is one of the most damaging beliefs people hold. They think investing is only for people with large incomes or big savings accounts. That's simply not true. I didn't start with much. Most successful investors didn't. What mattered wasn't how much money they started with. It was that they started at all. Consistency beats size. A small amount invested regularly will grow more than a large amount invested sporadically or too late. Waiting until you feel ready often means waiting forever. Start now, no matter how small. Time is more valuable than money at the beginning. Many people believe debt is a shortcut to success, that it's required to build wealth, live well, or keep up with others. In reality, most debt holds people back rather than pushing them forward. Debt reduces flexibility, it magnifies mistakes, it forces future income to pay for past decisions. While some forms of borrowing can be strategic, most people don't use debt strategically, they use it emotionally. Debt should be the exception, not the rule. Progress built on debt is fragile. This myth convinces people to gamble instead of invest. They confuse risk with intelligence and volatility with opportunity. In reality, many high-risk investments simply carry high risk with no guaranteed reward. True reward comes from understanding, patience, and discipline, not reckless speculation. The goal is not excitement. The goal is sustainability. Smart investing is often boring, and boring over time wins. Over the years, I've learned that people don't fail with money because they lack intelligence. They fail because they lack a simple system they can follow when emotions take over. That's why I believe deeply in frameworks, clear rules that guide behavior when fear, greed, or confusion try to pull you off course. If I had to reduce everything I've learned about money into one easy-to-remember system, it would be this: SAFE. Not because it sounds clever, but because following these principles will protect you from most of the financial mistakes people make in their entire lifetime. Let's break it down carefully. Spend wisely. Spending wisely doesn't mean depriving yourself or living a miserable life. It means being intentional. It means knowing exactly where your money goes and making sure it aligns with your values and long-term goals. Most people have no idea how much they actually spend. Money disappears in small, unnoticed amounts: subscriptions, impulse purchases, convenience spending. Individually, these expenses feel harmless. Collectively, they destroy progress. Spending wisely starts with awareness. Track your money. Look at your habits honestly. Ask yourself a simple question before every major purchase: does this improve my life in a meaningful way, or is it just temporary comfort? Living below your means is not a punishment. It's a position of strength. It gives you margin. And margin is what allows you to save, invest, and handle emergencies without panic, spend intentionally, waste less. Freedom comes from control, not consumption. Allocate smartly. Saving money alone is not enough. Money that sits idle slowly loses value to inflation. That's why allocation, how and where you invest, is critical. Allocating smartly means investing in things you understand. It means resisting the temptation to chase trends, hype, or promises of quick riches. Every dollar you invest should have a clear purpose and a long-term horizon. Reinvest your earnings whenever possible. Let growth compound. Avoid overtrading and constant adjustments. The more frequently people interfere with their investments, the worse their results tend to be. Smart allocation favors simplicity, patience, and consistency. You don't need dozens of investments. You need a few good ones you can hold through uncertainty. Let your money work quietly in the background while you focus on living your life. Focus on control. This principle may be the most important of all. You cannot control markets, interest rates, or global events. Trying to predict them is a waste of energy. What you can control is your behavior, how much you save, how consistently you invest, how calmly you react when things go wrong. Most financial damage is self-inflicted. People panic during downturns and sell at the worst possible time, or they become overconfident during booms and take unnecessary risks. Focusing on control means committing to a plan and sticking to it, especially when emotions are screaming at you to do otherwise. Discipline beats intelligence in the long run. Ignore noise, ignore hype. Control what's within your reach and let everything else take care of itself. Eliminate debt. Debt is a drag on every financial plan. High-interest debt, in particular, works directly against compounding. While your investments are trying to grow, debt is quietly pulling you backward. Eliminating debt doesn't happen overnight, but it must be a priority. Pay off high-interest obligations first. Stop accumulating new unnecessary debt. Create a future where your income belongs to you, not lenders. The absence of debt creates peace of mind that no luxury purchase ever will. It increases flexibility. It gives you options, and options are the true measure of wealth. Follow SAFE consistently, and you won't just grow wealth, you'll protect it. Let me leave you with this thought. Money isn't complicated, but people make it complicated through fear, impatience, comparison, and poor choices. I've lived long enough to see the same patterns repeat again and again. People chase shortcuts and end up disappointed. They ignore basics and suffer the consequences. And those who quietly follow simple principles, year after year, almost always come out ahead. You don't need brilliance. You don't need luck. You don't need perfect timing. What you need is discipline, clarity, and time. If you do the basics right consistently, life will reward you in ways that feel almost unfair to those who didn't. Wealth isn't built in moments of excitement. It's built in ordinary days, through ordinary decisions repeated faithfully over decades. So start where you are. Use what you have, make the next right decision, then repeat it. If you want more hard-earned lessons without the sugar coating, lessons that actually work, subscribe and stay with me. I'll keep telling you the truth about money. Whether it's popular or not, your future self will thank you for it.